Well, good afternoon, ladies and gentlemen. Of course, I want to say good afternoon to those of you who are joining me here on the East Coast. We're just after 12 o'clock, just after noon Eastern. I want to say good morning to those of you who are joining us from the Central Time Zones, the Mountain Time Zones, or Pacific Time Zones. And as always, we want to say good evening to any of you who are joining us from across the pond in parts of UK, parts of Europe, and of course, good early morning if any of you are joining us from parts of Asia, Australia, or New Zealand. Welcome to today's presentation, the Introduction to Power Options Wednesday webinar. Today we're going to focus on the search tool. Last week, as we headed to June expiration, we spent an hour talking about the portfolio tools to help you track and manage your trades and evaluate rollout opportunities. Today we're going to discuss tips on using the patented PowerOptions Search tool to identify new positions in a given strategy, or in given strategies, I should say, just to give you some basic tips on how these tools can greatly help you save time with your options research and analysis. Now, how we always want to begin, of course, is what exactly is PowerOptions. For those of you that don't know, PowerOptions is a patented suite of search and analysis tools designed for self-directed options investors. Ernie Zerenner created the PowerOptions tools back in 1997 after he retired from Hewlett-Packard. He had been trading options for about 15 to 20 years prior to that. And what he really wanted was just an easy set of tools where he could plug in criteria for the stock and the option and stock and option combination at the same time, rather than going to the library, looking up stocks in the newspaper, maybe IBD or Wall Street Journal, and then looking at different options chains and then doing everything by hand to see if the return matched what he was looking for, if the probabilities matched. So he wanted a straight set of tools that would help him identify that. So that's why the tools were created. Now, the search tool we're going to focus on today is going to allow us to scan against the entire universe of options in just a second or so to find only those positions that match our criteria. Of course, after that, we do offer tools that can help you quickly research and analyze and compare the risk and reward. We might go a little bit through that. And then, of course, the powerful portfolio tools to help you paper trade, track, and manage your positions. Now, in addition to that, we do also offer countless educational articles, help pages, and hours and hours of archived webinars to help you get more familiar with the tools on the site, as well as the various strategies. And we'll show you how you can access the webinars page later on. As I mentioned, we've been in business for over about 16 years now, but everyone here at PowerOptions, myself included, uses these tools to trade their own personal account. In fact, I don't actually log on to my broker until I've already made my decisions, know what prices I'm going to put in for my limit orders if I'm rolling an option or entering a new position. I've done all my research, all my analysis on PowerOptions. I just log into my broker to basically enact the trade. So we have many more years of combined trading experience. And for those of you who don't know me, my name is Mike Chupka. I'm the Director of Education here at PowerOptions. I had the great pleasure of working with Ernie Zerenner and the PowerOptions staff for the past 10 years. I handle a lot of the coaching sessions, education, and obviously the different webinars that we offer during the week. I have co-authored 2 books with Ernie, one on naked puts, one on protective option strategies. And we do support over 23 different of the common option strategies on PowerOptions. I am versed in all strategies on the site. So if you have any questions at any time about those, you can schedule one of those coaching sessions, give us a call, or just send us an email, and I'll be more than happy to help you out. All right, now what we're going to cover today is the quick and easy ways to customize the search tool to just identify positions that match your criteria. And you may be thinking right now, well, I don't know what criteria I have. Well, regardless of which strategy you're researching or you're trading, you probably have a good set of criteria already in mind, and that'll be enough to help you create a search, and we'll show that. And we'll talk about how to create a search for specific securities or specific needs. Some of you may be trading weekly options. Some of you just may want to trade on ETFs. Some of you may have a specific type of stock you're looking for, maybe a channeling stock or something along those lines. And then, of course, we'll discuss just general tips and suggestions. All right, well, that being said, let's navigate over to the PowerOptions suite of tools. What we're looking at right here is the basic format of a standard 14-day free trial to PowerOptions. For those of you that are just getting started, I want to encourage you to follow the 4 steps we've outlined for you. You can request a free user guide, of course. You can download that in the Learning Center. Or if you're just starting your trial, you'll see a forms pop up from time to time where you can request to have a printed user's guide mailed to you. We also offer a variety of interactive flash tutorials to help you get more familiar with the search tool, the option chain, of course, and the portfolio tools as well. We host a variety of free live webinars during the week, and as we see in my home pods down below, the data pods here, you can see to have that available on the main home menu in the upcoming live webinars pod, so you can always register for the next upcoming presentation. They're always free if they're posted here. And then, of course, step number 4, which we briefly discussed earlier, that free individual coaching session. The coaching sessions are not sales calls. It's essentially a 40 to 45-minute phone conversation with myself, Ernie, or Greg, Ernie's son. We'll walk you through the tools on the site, answer any questions that you have, and you can quickly link to that right here in the free coaching session. Now, real quick, as you can see, the PowerOptions tools are arranged by a tab navigation system. Our home tab is always locked in place where you can access the free coaching session, different information, white papers, archived webinars there in the Learning Center. You can pick up some of our available books in the store. You can follow along with the blog, of course, and if you need to make any changes to your account, you can use the My Account link underneath the main home tab. The Portfolio tab is also always locked in place. That's where we track our open positions. We may spend some time on that today depending on how long the presentation on the search tool goes. We'll see. And we also have a Signature Tools tab that's always locked in place. I'll review that at the end of the presentation so show you some of the features that are available there. And then, of course, we see my selected strategies. I mentioned that we do support over 23 different strategies, but here we just see some of the basic ones that I have selected, some of the vertical spreads and iron condors, naked puts, collars, married puts, and so forth. And then, of course, the Custom Spread tab where I can manually, on the fly, create a different strategy and just view the risk versus reward. And now our other tab that's always locked in place is the Other Strategies tab. So you may look across my list of tabs here and say, I don't see long calls or I don't see calendar spreads. Well, no problem. Once you get on, if you don't see, an available strategy that you're interested in trading, we simply go to the Other Strategies tab, and now we can customize which strategies we want available on our tab menu. Now, before we go any further, just so we can pace the rest of our discussion today based on what you want to see, we only have one poll for you today. And what I'd like to know right now is what option strategies are you currently trading or researching? You're mainly looking at covered calls and naked puts. Are you researching the protective option strategies, married puts, the radioactive trades, or standard collars? Are you typically doing vertical spreads, iron condors, bull put credits, bear call credits, and so forth? Are you looking at option buying, long calls and long puts? Or are you doing the time spreads? And it says diagonal and vertical there. I'm sorry for the confusion. It's supposed to say diagonal and horizontal. Every time I run this poll, I change it every third time, and then it just doesn't save. So I've got to get in there and change that. But that should be the diagonal spreads, and the horizontal spreads, the time spreads, calendar calls, calendar puts, and so forth. All right, I've had this poll open for about 50 seconds. I'm going to leave it open for a full minute, so if you haven't voted yet, I encourage you to do so. Looks like we have a three-way tie for second and a clear winner. Oh, and now that's completely changed. All right, so we'll leave this open for another 5 seconds. 4, 3, 2, 1. Drink a coffee there. Okay, we still have some votes coming in, but let me go ahead and close that right now. And as it turns out, we ended up with a tie for the majority between vertical spreads at 53% and iron condors, and of course long calls and long puts also at 53%. We have 12% of you doing time spreads, and then 47% are doing the covered calls, naked puts, and of course the protective option strategies. No problem. I think we'll get to spend time on all of those. But first, what we're going to have to do is we're going to have to customize our table. Okay, so I've got bear call and bull put, so let me move those up to 1 and 2. And I'll put bear call up to the top as well. And then we'll move iron condors using the arrows also. Okay, so we're just going to customize that. So that takes care of our vertical spreads. Actually, sorry, ladies and gentlemen, I'm going to remove bear calls for the moment, but we can always go back to that. And of course, you'll see the functionality. The search tool has the same functionality for each strategy, but we'll talk a little bit about that later on. What I need to do now is add long calls, it looks like. So I'm going to go ahead and add long calls. Put that to the menu. I'm actually going to remove collars for the time being. And let me add long puts in there as well. Okay, and we do have covered call and naked put, so let's move that up. And I'll remove naked put for the time being. And let's just add calendar calls. All right. Okay, so now that we have our strategy, we've got our vertical spreads represented, and we've got long calls and long puts. We've got covered calls, We've got the married puts there. We've got calendar calls. We'll leave custom spreads. So let us just click Save Configuration. And that'll go ahead and change our tab. All right, let's go ahead and start off and click on the Bull Put Credit Spread tab to begin. And what we see here, this is the same view that you'll see in any strategy once you click the tab. The main strategy homepage, you'll have a basic overview pod that just gives you some bullet points on the strategy and a link to a more detailed help page. You have the description of the available tools. So the search tool is what we're going to focus on today, where we're going to search the universe to just identify our positions. Every strategy is going to have a sample searches tool. Okay, and these are themed searches that you can use as a stepping stone to create your own personal search. And of course, if you're just looking one symbol at a time, let's say you just want to see bull put credits on Apple or Google, for example, or if you just want to see iron condors on SPX, NDX, or OEX, the broad-based indexes, we could use the search by symbol tool. Actually, for those of you using vertical spreads, whether you're using bull puts, bear calls, the debit spreads, or iron condors, if you're looking one stock at a time, I'm going to highly recommend using the spread chain because this will show you the calculated net credit and potential return based on the midpoint pricing, so you get a little bit more bang for your buck if you can get filled at the midpoint pricing. And of course, you can link to the portfolio tools, and then we have our historical back testing tools, the historical search and the historical search by symbol. But every strategy also has quick links that you can use. So rather than going to the tools pod and selecting what we want to start off with, we can just use the quick navigation links under the main tab to access what we want. Now, before we jump right into the search tool, we had discussed earlier that you may be thinking, okay, I want to do bull puts, I'm just learning them, just getting into them, and I don't know what kind of criteria I might want to use for a bull put credit spread. Maybe you want to just focus on ETFs because you heard they're safer. Maybe you want to use larger cap stocks knowing that you might not get as high a net credit, but at the same time you'll have a little bit more safety, a little bit higher probability that the stock won't gap down against you. Well, if you're not sure where to begin, you can always start in the sample searches menu. And here we see that we have three basic default searches for you to use as a stepping stone for the bull put credits. There's an ETF search on bull puts and brief description. We're just looking on bull put credits on our ETFs, 10 to 45 days out to expiration, minimum 4% return sorted by the highest probability. So you can use that default as a stepping stone to create your own personal search. And what we also have here is the 5-star bull put search. What that means is these are looking for bull put credit spread just on the stocks that are rated 5-star by Standard & Poor's, and they have to be at least 5% out of the money. The short put, in this case, or the short option, has to be at least 5% out of the money. And then there's a safety first bull put search. So these are looking at bull puts on the large cap stocks with a high probability of expiring worthless. Well, bull put credit spread, we want to look for bullish stocks. We want to see some good return. So let's go ahead and just start off with the 5-star bull put search. I'm going to go ahead and click that link here in the sample searches menu. But as we can see when it comes up, that's going to link us directly into the main search menu. Now, I have a lot of criteria selected here on our search results. When we first go into a sample search or a search, we'll see the the results that match that criteria that we selected. Okay? What I'm going to do, though, is I'm going to arrange our columns a little bit here. What I'm going to do first, I'm going to go into Choose Columns on our search results. And this will take us to a configuration page where we can pick and choose which data we want to view, which data in those columns we want to view as we're analyzing our trades in any strategy. What I'm going to do first, though, is let's go basic. I'm going to reset to the default columns and then submit and save. All right, so let's go ahead and close the window. Just want to refresh the page, and we'll talk about this later. So we lost some things there. We just have a more simple view now. But I'm going to show you some of the criteria, again, that I prefer to use. Instead of starting off with the criteria already selected, we're going to go back and talk about it. Okay, so we have our listed trades here. First one we see for bull put credits, AKM, Akamai Tech, is currently at 42.57. We're shown that we can sell the August put for $1.79, it's 52 days out, and at the same time buy an August 38. So it's a 2-strike difference. Looks like this one has single strike options for $1.18. So we have a $2 strike difference. We're going to receive a net credit of $61 which means we'd have $1.39 at risk for a potential 43.9% leveraged return. Okay, looking to make 61 and risking $1.39. So it's a 2-to-1 risk-reward ratio. Now, there's more information, of course, you probably want to see. But before we do that again, before we go back into the choose columns, let's talk about, well, would I go ahead and trade this right now? No, the first thing I'd want to do is I want to scroll down below the listed trades. Yes, I know I selected the sample search for 5-star bull put credit spreads, so these are only on stocks that are 5-star rated by Standard & Poor's. But what other criteria are being used? Well, let's scroll down below the listed trades, and now we can take a look at the parameter field. Now, the parameter field we've arranged for you by sort of also a tab navigation system, so you can quickly identify whether you want to look at options data, things such as your days to expiration, implied volatility and implied volatility ratios, minimum net credit, maximum risk, your percentage return, your range in or out of the money. If I'm doing a debit spread, naturally we want to be in the money. Without credit spreads, we're looking out of the money. And then some other details such as the short option delta, delta ratio, probability, it's probably very important for most of you, and then liquidity, option volume, open interest, and so forth. And we also have views for the stock technicals, the stock fundamentals, and then, of course, the lists. And in the list view, you see that we're already including the S&P 5-star list, which told the system we're screening just against stocks in the S&P 5 stars because that was the sample search that we clicked on. Okay, but the easiest way for us to view what is actually being used in the sample search or in the default search I clicked over from is on the right-hand side in our active filters menu. So we can quickly view what we're seeing for each one. So for our options section, well, we're looking at all months to expiration, but we're limiting it to be between 15 and 55. We want a net credit greater than 25 cents. We're keeping our monetary risk, sort of the strike difference, to be less than $9. So we probably wouldn't see anything that was more than a 10-point spread for this particular search. We want a percentage return of greater than 3%. We want to start off with at least 5% out of the money or more. It doesn't appear we're using any technicals right now and no fundamentals. Part of the reason for that is that we already included the stock list for the S&P 5 stars, which is taking into account things such as, earnings per share, growth, price movement. So we didn't put anything to our fundamentals or technicals yet. Okay. And of course, if we wanted to add or remove a certain sector or industry or screen just against a certain sector or industry, we could do that as well. All right. Now, let me erase all that, and let's talk about our basic setting. Let's say that right now you knew that you were only looking at positions for July expiration. You didn't want to go all the way out to August just yet. You want shorter term. Well, we can quickly do that. We could either change the month field, the drop down here, for all months. We could just go straight to July, or we could limit the days to expiration. So I could choose just to go from 15 to, let's say, 35. Okay, but you could do that either way. Now, if you wanted a higher net credit, we saw that we were limiting the return to be greater than 25 cents. Okay, so we'll just plug in our net credit field here, and we'll just change that. Let's go to 50 cents. In addition to that, maybe we didn't want to trade any positions. There's two ways to do this. Let's say we didn't want to see any positions that had greater than a 5-point spread. Okay, well, we could limit our maximum risk, but probably an easier way is to adjust our strike difference. So down here in the price and the strike price, we have a strike difference, and I'm going to go ahead and set this less than or equal to 5. All right, now I want you to notice something. I made two changes right now. We changed the net credit, and we changed the strike difference. So as I'm making subtle adjustments into my filters, we see over here in our active filters, this is now changed to red text, meaning that we've changed two of our criteria, or some of our criteria, but we have yet to submit it. So you can always tell if you've changed something and haven't submitted it if you see red text in your active filters section. Okay, now another thing we might want to view is the probability. This is the theoretical probability the stock's going to be trading, in this case for a bull put, at or above the short put strike price at expiration. This is taking into account, sort of the Black-Scholes pricing model, the historical trading range of the stock, using the implied volatility of the options to determine what is the likelihood that the stock will stay or remain above a certain strike price in the next 20, 30, or 50 days, however far you are to expiration. As a general rule, most spread traders I talk to start off with a minimum probability of 75%. Of course, if your preference was that you only wanted to see bull put credits, bear call credits with a probability of 80 or 85, maybe even 90% or higher, and you could just plug that into the field. All right, so once I've made just a couple changes, go ahead and click Submit this search. And now the system is going to reevaluate and find only those positions that match our new criteria. We're still looking at just the 5-star list, but we've increased it to look for that higher probability, that higher net credit, and we want to keep the strike difference down to 5, less than or equal to 5. Okay, so it looks like we removed a lot of those positions that we saw. Apparently we've got a ton of Apple positions here. But one thing now that we might be missing is that I wanted to look at the strike difference, sure. We know that we have our time frame. We've got our net credit. The net credit is shown. But maybe I want to see that monetary maximum risk. I can see here, for example, that our first position on AAPL is the stock's right now at almost 400. It's at 398.47. You could sell a July 375 for 615. Buy a July 370 for 520. Gives you a net credit of about $1. So it's a 23.5% return. But now I can do the math and say, okay, well, if it's a 5-point spread and I've got a 95-cent net credit, that means my monetary risk is 405 if it goes against me. But why have to do that? And of course, we're not seeing the probability, which is one of the filters that we selected. All right, so now we'll go back into Choose Columns again. Now that we've customized our search table to match some of our criteria, I'm going to go into Choose Columns, and on your left is the stock-related column. So if I want to see things for what is the historical volatility of the stock, the average stock volume, other fundamentals and technicals, we could check those. I'm going to focus just on the option-related criteria. Everything that you can use to screen by in the search is going to be available for you to view in the data columns. So what do I want to see? I want to see the maximum risk, and I want to see the probability. And of course, you can see here some of those other filters, the sell implied volatility, the buy implied volatility, or the implied volatility ratio, sell over buy, short option delta, long option delta, and the delta ratio as well. If you want to see the volume or the open interest, just pick and choose which data columns you want to see. All right, so let's go ahead and submit and save those. Again, we'll be prompted to close the window so it can refresh the page for us. And we could also change the order of the columns in that menu as well. I'm just going to keep it simple and just add them to the last 2 rows. So there we go. Now we've got our maximum risk shown for us. Well, it's 405. We were receiving a 95-cent net credit, and it was a 5-point spread. And we've got our probability at 79.6%. Now, if you want it to be more conservative, you're probably going to be focusing more on the other Apple spreads that are listed here. And I'll talk about this in a moment as well. So we see here there's a July. We could sell the 370 and buy the 365, another 5-point spread for a net credit of 53 cents with an 87.1% probability. But now something might stand out to you here. There's another trade here that's showing a July 375 with a July 370. Why is it listed twice? But this one has a probability of 87.1%. What we're seeing here is because we left it open to all months and just used a days to expiration of 15 to 35, we're seeing a variety of different Apple spreads. The first one we saw is the standard July expiration. But Apple is one of those stocks that now offers what is called the continual weekly series, meaning that at any time it will have 5 consecutive weekly expirations in a row. So you'll have one that's 7 days out, 9 days out, I guess in this case, 16, 24, and then 30. So that's what we're seeing. Here's the July 24 days out. That's essentially the 3rd week out. And then to July 16, that's the 2nd week out. We don't see any of the other weekly options here that expire in 9 days, most likely because they didn't match our net credit and our probability. Okay, so 2 things. Now, what if we just wanted to see the standard July expiration and we didn't want to be confused with all these 24 days, 16 days, weekly options, and so forth? No problem. We'll just go back to our settings, and rather than use all months, we'll just switch to July, the standard July expiration. We could leave our days to expiration as is, or we can just remove it if we're just looking for July. Okay, so let's go ahead and submit that. We'll keep our other criteria as is. All right, so now we've narrowed it down to just 3 positions. We've got one on Celgene, which is offering, of course, the net credit, lower probability. It's only at 75.3%. And then, of course, we have our 2 Apple positions. This is not a recommendation or suggestion. We're just showing the functionality of the tools. Okay, but that was starting from a sample search. Oh, I'm sorry. Forgive me, folks. I was wrong. I was looking at a wrong chain earlier. The standard July expiration, my apologies, is 24 days out. The 30 days out is the 4th week to expiration. So right now we have 9, 16, 24, which is the standard expiration for July, and then 30 days, which would be the 4th week out. And of course, after this Thursday, you'll see a new week cycle come out for those continuous series as well. Okay, so that's starting from a sample search and then just going through and adjusting your criteria based on what you want to see. Now, we were using a stock list. We were just looking at the S&P 5 stars, but if you wanted to open up your universe, you could simply go into the list field there, and we could just change this to no list. So we're opening up to the entire universe of optional stocks. But if I wanted to do that, if I did do that, then I'd want to use some of the fundamentals and technicals to narrow it down. Okay, that's taking either a default search from the main search. So if we go into our menu here, if we just went into the main search, we'd have 3 default search: weekly bull put credits, bull put number 1, and initial values. We actually started with the sample search. But let's say we wanted to start from scratch. We have some basic criteria that we'd want to use for a bull put credit spread, and we just want to use that. Well, let's start from scratch. What I'll do is just hit the button here for clear filters up at the top, and that's going to empty everything out of our active filters menu. Now, let's keep it simple. We're looking for a bull put credit spread, meaning we want a stock that probably has some good fundamentals or has some good growth, maybe trading in an uptrend. We want a stock that's going to be neutral to bullish over the next 24 days, let's say the standard July expiration. All right, so what are some basic things we might use? Well, if we start off in the fundamentals, we may want to avoid any surprises. So I may go ahead and select an earnings date, not between now and expiration. I don't want anything to come out before July expiration 24 days from now that may cause the stock to gap down and result in a maximum loss on my bull put credit spread where I can do nothing to roll it or maneuver it and either just gapped up or gapped down overnight. For this particular search, you may not have to worry about ex-dividend dates, but if you're trading covered calls on dividend-paying stocks, you may want to avoid stocks that have an ex-dividend date between now and expiration, simply to avoid early assignment if you're hoping to just roll out of the money calls month by month by month on the position. Now, if you're worried about using a dividend-paying stock with your bull put credit, worried about the stock dropping maybe 30 cents or 60 cents on the cost of the dividend between now and expiration, okay, maybe we'll check not between now and expiration. What are some of the other things we might use? Well, since I'm using a leveraged spread, I might not be concerned about stock price. I'm not have to worrying about buying 100 shares of Celgene at $100 or 100 shares of Apple at $398. So the stock price range may not apply to you. But since this is a bullish strategy, you may want to look for companies that have shown good growth over the last year. And one thing we use for that is the earnings per share growth. The growth in earnings from last year to this year reflects good management of the company. So I might use an earnings per share growth of 5 to blank, greater than 5%. This might be a criteria I'd also use for covered calls, naked puts, standard collars, married put trades, and perhaps even long calls. I may even use a larger range. Maybe if I'm using a long call, I may want to see stocks that have shown strong growth, maybe greater than 10% or so forth. Now, many of you may not use PE, but as a general rule, sometimes I'll just plug in a PE of 0 to 50. So that's all we're going to use for the fundamentals for this particular search. And this, again, just showing you ideas of what you could use. I'm not recommending that you should use this search criteria. Let's go ahead and take a look, though. Technical search. Okay, so in general, I want to show stocks that have a good volume. This filter is actually measured in thousands. So I'm going to use an average stock volume of at least 750. So I'm only looking for stocks that have traded at least 750,000 shares on average per day. You want to increase that to 1 million, you would just plug in an average stock volume of 1,000 a blank, greater than 1,000. We could use other filters, percent of 52-week range. If you didn't want to see stocks that are at their 52-week high, we could restrict it so the stocks are at the lower percentage 52-week range of less than 80. Or we could specifically look for stocks that are at the upper range of their 52-week high and low. If you had a range for historical volatility, you want to see some movement but maybe not too much, you might use a historical volatility of greater than 0.20 to maybe less than 1.2. You don't want to see something that fluctuates drastically, but I want to see some movement on the security to get a reasonable premium. We won't get into this now unless there are questions later, but if you wanted to use certain filters for Bollinger Bands, you could use the %BB20 or the % bandwidth. If you're not sure what a filter means or how you would use it, at any time you can just hover right over the link on the parameter field here, and it'll give you a full description and what you may want to use looking for something that's at the upper range or at the lower range as well. So there's always helpful tips that you can use there. One other basic thing I'll use in this particular field is I'm going to look for stocks in an uptrend. Yeah, we've had some fluctuations recently, but I still want to keep to that if I'm doing a bull put credit spread. So I'm going to specifically look for stocks that are trading above the SMA 50. You could also use other filters if you wanted to look for stocks where the 20 days above the 50-day moving average or the 50 days above the 100. There's even a filter here I use honestly in long calls where I look for the stock price and the 20-day moving average to be greater than the 50-day. So I'm looking for a more pronounced uptrend in a shorter term. If you do get down and dirty, for lack of a better term, into the technicals, we can also use several fields for looking for long-term uptrends. And what I mean by that is we have these fields here for the days crossing the 20-day moving average. So if I only wanted to look for stocks where the stock price has been over the 20-day moving average by at least 10 days, we can filter by that as well. Now, some of you may use that as a contrarian indicator. If you're using your bear call credit spreads, for example, you may look for stocks that are trading under their SMA 20 or SMA 50 for the last 10 days. Or you may want to look for stocks that are in that upper 52-week range, 90% or 95% or higher of their 52-week range, and have been over their 20-day or 50-day moving average for at least 10 days, if I'm looking at a bear call credit spread. Now, what sense does that make? That sounds like a really good bullish stock. Well, some of you, again, may be using that as a contrarian indicator, meaning, hey, the stock has been long in the tooth, it's had a long run, it's probably time for reversal. We may consider using an out-of-the-money bear call credit spread at this time. You can also look for stock days up and down. How many days has the stock been moving up or down? And if you use MACD, we have a signal here for, you can screen where the MACD has crossed over the EMA 9 by a number of days. And if the MACD is over the 0 line or the EMA, the signal line, the EMA 9, is above that line as well. I'll explain that a little bit later in the presentation. I want to just get back to the main functionality. All right, so what have we done so far? All we've done is put in some basic criteria looking for something that might indicate a bullish stock. We're trying to avoid earnings and an ex-dividend date. We want stocks that have shown good earnings over the last year to year, at least 5% growth, a relative PE ratio. We limited historical volatility a little bit, and we look for stocks that are trading above their SMA 50 and have a good average stock volume. Now let's talk about what we'd look for on the actual spread. I'll move over to the options criteria. And let's just stick with standard July expiration. But as we mentioned, we could filter this down to use all the weeklies, so we could see the 9-day out, the 16-day out, or the 24-day out. We could also use all months and just restrict it to be between 2 to 9 days to look for the next week expiration. Or if we want to look really close in, we could select all months or all weeklies and just go 0 to 4 days out, so we're just seeing those options expire on Friday. All right, you can customize that any way you want to. But we're just going to use a basic general expiration search, so I'm just going to go ahead and select July, which we know is 24 days out. Well, I'm not going to use implied volatility, but if you have criteria that you use for what you want to see for your IV on your sell option or the ratio of the sell to buy, you go ahead and plug that in. Let's talk basics. Net credit. Hey, let's keep that 50 cents. I want a minimum 50-cent net credit on my security. Percent return. Maybe I want at least a 5% leverage return. You can increase that if you want to look for 10% or 11%. You have this in, these are things you'd probably already have in mind. I'm not using any kind of advanced criteria. If you knew that you wanted to create a search for bull put credits, you already know what return you're looking for a 30 to 35-day time period. You know what minimum net credit you want to receive based on probably the number of contracts you trade on average, and of course what your commission costs are as well. To be safe, I'm just going to keep that basic view. I want my short put to be out of the money, so I'm just going to put it in. I want it to be at least 5% out of the money or more. I'm not going to worry about the option bid because that's already taken care of in my net credit. And I'm not going to worry about the Black-Scholes ratio. I'm not going to worry if the market thinks my spread is overvalued or undervalued too much. If it matches the rest of my criteria, if it looks like a good stock to me and it has a good return, the return that I want and the probability I want, am I really overly concerned if the market considers that option to be overvalued or undervalued? Not necessarily. However, if there is a wide gap there, I may consider researching why is this so overvalued or undervalued. But in general, I'm just looking for positions that match what I want to see. Probability, again, we'll start off with that basic view of at least 75% or higher. And my strike difference, well, I'm going to keep it to that $5 risk I did before. I want it to be, I may see 2-point spreads, I may see 3-point spreads that match my criteria. I could filter those out as well if I wanted to. But right now, I just want to keep my strike difference less than or equal to 5. So we'll see 2-point spreads, 2.5-point spreads, maybe even some 1-point spreads, and our 5-point spreads also. Basic liquidity. All right, well, I want to see some movement, some option volume today. So let's just put in a general view. I want to see 25 contracts at least traded today, and I'm going to use an open interest of at least 50. Now, that basic view I just put in, this is assuming that, okay, on average, let's say that I trade 5 contracts of a spread, whether it's a bull put, bear call, or an iron condor. With my 5-point spread, let's say that'd be $2,500 at risk on the position, minus the net credit. All right, so just a very, very general rule of thumb. You don't know what you'd want to use for liquidity, for volume today, or open interest. Basic rule is, well, if I know how many contracts I trade on average in a given strategy, well, I might want to see 5 times the option volume today. So if I'm trading 5 contracts, I put in a basic option volume of greater than 25 contracts, and an open interest of maybe 10 times the number of contracts you're planning on trading. So basic view of 50. Many of you probably look for higher than that, and that's perfectly fine. Most investors I talk to during coaching sessions or during webinars, they're looking at open interest of maybe greater than 1,000 or greater than 5,000. That's perfectly fine. This whole tool is designed for you to put in what you want to see, just to identify those positions. All right, now it looks like I've entered a lot of criteria here. Going over to the active filters, I haven't submitted anything yet, but did I put in anything that was way out of bounds or anything that was very advanced? I don't think so. I think the most advanced thing I may have used is historical volatility, which I don't use on a normal basis, honestly, when I'm trading these positions. But all we did is put in something to identify stock to avoid earnings in the ex-dividend, wanted to see some good growth, a normal PE ratio, good volume, stocks in an uptrend, and then the criteria that matched what I want for my spread. I want to be a little bit out of the money there, want a reasonable return, 50-cent net credit, a good probability, a strike difference, less than or equal to 5, and some volume and liquidity. Let's go ahead and run that and see what we get. All right, so this is less than I expected. I think the reason why is that we're heading into a new earnings field. A new earnings season. A lot of the stocks that I'm trading right now in my portfolio have earnings coming up between now and July expiration. So we only have one position that matched our criteria. This may be too restrictive. In fact, it is. When I run a search, what I specifically want to see are positions that, I want to see a total number of trades around 20 to 25, maybe 24. I just want a nice manageable list to help me save time. Now, this one greatly helped me save time with my options research and analysis. Now, one of the things I want to change, and this is a good example here, is let's just take out the earnings, see if that expands it more. That'll give us an idea of maybe how much that's restricting it. Now, we're in the options tab, but if I quickly want to navigate to a criteria that I've used, we'll just go over to that active menus pod. I'm sorry, folks. Get off that. There we go. So we see our earnings menu here, not between now and expiration. I'm going to click the little edit filter magnifying glass over here next to that one, and it'll take me right to that section. And I'm just going to go ahead and remove the earnings date. I don't recommend doing this. Anytime I do vertical spreads, I always look to avoid the earnings date between now and expiration. In fact, most of the time if I trade a naked put or a covered call, I do the same thing. So I don't want to risk that stock dropping 15, 20, or 25% overnight due to a bad earnings that I can't control, something I miss. I'm still going to do my due diligence, but you can always miss something that comes up and just get that earnings surprise and that shock. And for a credit spread, well, if I'm doing a bull put, that's going to hit me in the full loss, and there's nothing I can do about it. No stop loss will help you or anything like that. And, of course, on the bear call side, you may be risking that as well, as the stock could gap up 10, 15, 20%. We saw that the last earnings at GMCR, I believe it jumped 25% from $60 to $75 on its earnings 2 months ago. All right, let me take that out and submit the search. No, that really didn't open it as much more as I thought it would. Okay, so this is still a good search, but we've limited our results down to only 2. But these are, again, it's just pretty basic view of what we're looking for. I'm wondering if I misjudged historical volatility. Let's try that. Because the put premium should be pretty high right now based on the last market movement. Yep, it's only opened it up once. So Bed Bath & Beyond has a much higher volatility than we want to see. All right, so this is a pretty restrictive search, but I kind of like it because it matched what we'd look for on the general view. And that's important because, if you're coming onto the search for the first time, you see the list of criteria and you feel that it's, it's daunting. It's a lot of criteria to use for the stock and the option. The simplest thing to do is just start off with what you'd already look for in a given strategy. Clear the filters, plug in some basic criteria, and then run that search. And you may find that even the basic criteria that you plan on using, stocks in an uptrend, looking for stocks that, looking for stocks that have a high probability and a good average stock volume, and match the net credit return and probability you want, you've probably already narrowed down the, 1.1 million bull put and bear call credit spreads that are built every 20 minutes down to a manageable list of probably 15, 20 to 25. Now, real quick, I'm going to save this search. And once you've put in your criteria and you're happy with the results, let's go ahead and click Save. And we'll be tempted to put in a search name. I want to come back to this later on. So we're going to save this as Bull Put Search. And in the description below, we could put in some of the basic criteria. I'll just put in seems restrictive. Actually, let's be honest. Another reason, we'll change that in a second just to see. Seems restrictive, but really wasn't. There we go. And then I'll just click the text link to save this search. So now, every time I come back to Power Options, I go into Bull Put Credits, and I go into Search. My default search, my criteria will be available for me. I want to scroll back down here. Let's just try this. I was hoping someone would point this out to me, but it's okay. Let's do this. Let's adjust our simple moving average to simply none versus none. The last 10 days probably took us out of this range, so let's go ahead and see what we've got. Okay, so that did open it up a little bit more. Apple, for example, IBM, Celgene, I don't think was in that original list, Win Resorts, and Whirlpool. So I just want to check. Okay, good. I'm sorry, and Whirlpool are under 50-day moving average. So they're currently not in an uptrend if you're using the SMA 50 for your results. Okay, now I'm going to maneuver over to long calls. We're going to come back to bull put for a specific reason later on. But I'm going to go over to long calls now. We're going to talk about some of those more advanced things that you can use in the long call search. And then, of course, any of you have any questions, at any time, go ahead and send those in, okay? Because we're at 12:42 now, 12:45. We've got about 15 to 20 minutes left in the presentation. So if you have any questions about anything specific, go ahead and send those over. Just use the question pod on the GoToWebinar technology. Send it to me. Let's have some fun with long calls, okay? That was second place. Yeah, it was second place. We want to spend some time. Let's go to long call. And as I mentioned, this is the same home view that we saw before, okay? You've got your basic profit and loss chart, your overview with some basic bullet points, detailed help section, and then a description of each of the tools that are available, and then the quick links underneath of it. Let's go to search, and instead of sample searches, let's go to search, okay? Okay, Martin asked, will this be recorded for our review? Yeah, I am recording this presentation. I'm not sure if I'm going to post it. I probably will. The reason why I say that, Martin, is I think I already have a really good presentation that focuses on bull put credit spreads and potentially long calls that's already archived. I'll show you where to get the the archive in a minute. And Martin also asked, is your software good for weeklies? Oh, absolutely. Absolutely. Let's do that. I'm going to do that real quick for Martin, and we'll come back to long calls. For you long call traders, it's going to be real quick. As we mentioned, let's go back to bull put real quick, and we'll just go to the main search. This will pull up our default search. So we saw earlier, Martin, I don't know when you came in the presentation, we saw earlier when we ran our first bull put search that we had days to expiration here when we looked at our results. You can always see that by the number in parentheses, but we had spreads with 16 days to expiration, 24 days to expiration, and 30 days to expiration. So we are screening for all the weekly options depending on how you set up your search. Now remember, I selected July from our month's drop-down menu, so that automatically filters out the weeklies. And what do I mean by that? In order to keep it simple, it sounds complex, but in order to keep it simple, if you select a month of just June or July or August or September, you're just looking at the standard expirations for those cycles. In this case, June is still here because the quarterlies are available, so the quarterlies would appear as well. But I can limit this. Let's do a basic search, a really basic search from the beginning. I'm going to clear our filters out again. That doesn't erase my default search. I can go back to it at any time. But we're just going to run a bold put credit spread for weeklies, which you can do in any strategy. I wouldn't use weekly options for long calls, just my personal preference. Weekly options are probably best reserved for income strategies such as covered calls, naked puts, standard collars, your vertical spreads, bold put credits, bear calls, iron condors, and the calendar spreads. I've been trying to play around with the technique of using diagonal spreads on some of these stocks that offer those continuous cycles where I'm buying an option that's 5 weeks out in time and trying to sell week by week against it. It hasn't been going too well. I think it's better to still buy a 2 or 3 month or maybe a 4 month out call when doing a diagonal or horizontal spread and then try to sell weekly against it because that 5 week cycle just seems too close. But all right, let's run a real basic weekly search from scratch. You could use the default criteria I've put together for you for weekly bold puts or weekly naked puts. They're all available as default searches, so you could start there. We're going to start from scratch. Let's look actually for Friday. Okay, 3 days away. So I'm going to look at all months. I could use all weeklies, but I'm going to look at all months, and I'm just going to go 0 to 4 days to expiration. Okay? I want a net credit of at least 10 cents. We have to keep in mind, if we're doing something this short in time, we've got to have some forgiveness. We're not going to be able to find necessarily credits of 50 cents or 60 cents 4 days out. If they're available and match your other criteria, this patented search tool will find it. But I'm going to start basic with just 10 cents, minimum return of 1%. I still want to be out of the money, but I have to give it a little bit of leeway now. Maybe I only want to be 1% out of the money or more, but I still want a good probability. Okay, I'm still going to look for, let's just call it 70% probability or more. The strike difference I'm not going to worry about right now. Well, let me just run that without putting in any stock criteria whatsoever. Let me go ahead and do that. Submit that search. Okay, too many results, 366 results. So there are 366 results, potential bold put credit spreads that have at least a 1% return, 10 cent net credit, and at least a 70% probability or higher. Okay, so 2 things I'm going to do to filter this down. If I'm happy with a 70% probability and maybe a 1% return, maybe I'll increase this. Let's go 75, and let's go 2. Now at this point, let's run that. I know one thing I'm going to do here as well. All right, narrowed it down to 287. All these strange ETFs are making me a little bit nervous, especially some of the leverage ETFs I saw earlier. So what if I wanted to narrow this down? I just wanted to look at stocks. I don't want to look at the Brazil Index ETF, or I don't want to look at the Emerging Markets ETF. Not to say they might not be good trades, but let's say I'm just looking at standard securities. Okay, so what I'm going to do is go to the lists now, and I could just include a certain list. I want to see, S&P 5 stars again and so forth, but I'm going to go ahead and exclude right now indexes and ETFs. I just want to see the standard stocks. Let's submit that. Okay, Charles asked a really good question, and I'm going to go ahead and take that into account in just a moment. Okay, so now this narrowed it down to 87 results, but they're all the weeklies. Everything expires 2 days away. Okay, and then what I'd probably do now is enter in some of the basic fundamentals. Okay, now let me take into account Charles' question. Charles wanted to know, and I'll get to those long calls in just a moment. Charles wanted to know, do your option prices take into account consideration for slippage? Recently, I've run into a lot of problems with this. Okay, well, Charles, I'm not sure what strategies you're doing. If you're doing the credit spreads and the debit spreads, let's say that here's my results. Okay, I've got a couple on BBRY. I'm going to ignore those because it's only a $15 stock. I'd probably check that out ahead of time. I usually look for stocks greater than 15 or 20 when doing my spreads. Personal preference. You can put in whatever you want. But let's go with Nike. Okay, 61.83. It's 2.5 point spread here. I could sell the June 60 for 96 cents and buy the June 57.5 for 41 cents. 55-cent net credit, 28.2% return for 2 days, provided Nike stays above $60 in the next 2 days. Okay, well, it's close because it just gapped up $1.44 today, so it was only at 60.40 this morning. Now, Charles, what you see on the search tool is based on the natural bid price, worst case scenario, and the natural ask price for the option that you're buying. With the weeklies, though, it's probably pretty close. The bid-ask spread, especially for something like Nike, is probably very close. But as I mentioned earlier, at this point, if I want to do my research and analysis, what I'll always do for every strategy is my first step is I'll take a look at the chart. I want to make sure that the stock has a good trend that matches the strategy I'm looking for. I'll then take a look at the company news information and the profile if I'm not familiar what Nike is or their competitors, and I also want to see the recent news headlines. And I may get into detailed research, look at all the available data for the stock or for the options as well. But one thing I'd want to do at this point is I'm going to link to the midpoint spread chain for Nike. Okay, and what this allows us to do is this pulls up, this is a basic view. It allows you to put in some criteria. We're in a different tool now, but if you're looking up positions one at a time or researching from the other range. Now remember what what the spread chain does for us is it allows us to put in some basic criteria so we can identify the spreads on our stock, but it's using the midpoint pricing. So let me change some of this basic criteria. The spread we were analyzing was a 2.5-point spread. We were looking for a minimum net credit of 10 cents. I want to be at least 2% out of the money, I believe, minimum return of 2%, and the probability we were looking for was did we increase that to greater than 75, and I want to use the 2 days out. So let's submit that. Okay, and it highlighted in red for us there. There's the spread that we were looking at, the 57.5, 60, back on the spread chain. Here on the right is our bull put credit spread. Now, let me go back to the Smart Search. The spread we were looking at for Nike was a 55-cent net credit based on selling at 96 and buying at 41. But according to the midpoint spread chain, we could actually get 99 cents and 38 cents using the midpoint pricing, which would increase us to a 61-cent net credit or return of 32.3% as opposed to 28.2 using the midpoint pricing. All right, so for the spread traders, that's what I want to look at. You can also evaluate the slippage and the bid-ask, Charles, if you're doing other things such as a covered call and the naked put by just linking to the option chain. But for those of you doing spreads, you want to take a look here. Now, when I linked over from bull put, one of the views here is that it shows me the put credit call debit parity. Why is it showing me that? Well, because in addition to trying to take a look at the midpoint pricing and get the best bang for your buck on the potential spread and what you'd use when placing a limit order with your broker, you also want to compare it to the parity trade. This is the profit and loss, basic profit and loss chart of our bull put or bull call debit spread. As long as the stock stays above 60, if we get the midpoint pricing, we'll make 61 cents on our bull put credit spread for a 32.3% return. However, if the same scenario comes out to play, well, on the call spread, we'd have a debit of $1.88 using the midpoint pricing, which means on a 2.5-point spread, well, we'll get a little bit more. We'd get 62-cent return, wouldn't we? So it's not too much. It's 1 cent extra, but we're looking at 32.3% versus 33. So even though I'm a credit spread trader, when I look at this view, I may be more inclined to go with the debit spread because it's giving me a little bit extra. It's 1 cent, but it's still a little bit extra. The reverse of that, if we were going deeper out of the money or out of the money for the put spread or in the money for the call spread, with our higher probability, we could get a 26-cent net credit or 11.6% return for the bull put credit, but the debit would only give us a return of 10.6% using the midpoint pricing. So there's the issue. Okay. Oh, okay, sorry about that. All right. So let me go ahead and I just wanted to show that for Charles. Let's go into long call real quick. We'll go back into search, and we'll see the same view. Now, this will show us the listed results in this strategy based on our default criteria. We're using the initial value set. But again, at any time, we can choose what we want to. We can plug in our criteria based on what we want to see, and we can start from scratch. Let's go ahead and clear the filters. And we're going to keep our days to expiration. We'll start with the options field. We'll keep our days to expiration here at, let's say, I want to go long term, I'm sorry, 90 days to 160. So about 3 months to 4 months, 5 months out in time, excuse me. Not going to worry about in or out of the money. You could put in the delta or the strike price option volume, let's just say greater than 10, and an open interest greater than 100. So if you wanted to use in or out of the money, use a delta. I will restrict the delta. I only want to see a couple strikes. No, actually here. Sorry, folks. I'm just going to look for one strike in the money. 1, 2, 1. Now, let's talk about some of those advanced technicals real quick. Well, looking for long calls, I would put in some fundamentals again, that earnings per share growth, price per earnings, broker recommendations, and so forth. But what we want to do is kind of focus on some of these others that you can use. Now, I see that first. I'm sorry, folks. I've got something here I got to look at. Okay, I'm sorry. It's Martin's question. Oh, okay. Well, Martin's talking about how he has the blueprints and he hasn't been able to get started going yet. He wants to know where he's to start off. When he looks at the fields, it seems daunting that there's a lot of criteria. There is, but you just got to keep it simple. Let's see here. Manual, should I dig into the simplified starting process? Everything you need for the married put technique is in the blueprint. Talks about the power options criteria, how to use the tools, Martin, so that's all there. It seems that there are so many fields to choose from. Yes, but when you go into the married put menu, Martin, and you go into the search for the married put, your 2 default searches are the exact criteria that Kurt and Ernie discussed in the blueprint. So you have that as a starting point. You can just tweak. The only things you may want to tweak in that are your stock price range based on what you're looking to buy for the married put techniques. And what you can also use, of course, is just adjust the risk. You know, the risk may be from 3.5% to 9%. You may adjust it down to 7.5% or so. And Martin, yeah, so what I'll do is later on I'll send you some emails about where you can go to get started. I have a variety of webinars that are recorded just for using the Power Options tools for radioactive traders, as well as other strategies. I'll show those in a minute. Okay, but let's just talk about basic view. I'd mentioned earlier if you wanted to look for stocks in an uptrend, okay, so I'm going to trade a long haul. I want to see stocks where the stock and the 20-day moving average is above the 50-day moving average. Now, right now, this may relate to inverse ETFs based on what we've been doing for the past 10 days, what the market's been doing, but we may see some other ones that have restricted it as well. Okay, so let me go ahead and submit that real quick. I just want to see the total number of results, and of course, the reason why I limited it to one strike out of the money is that so we wouldn't get a lot of duplicates. All right, so already just those stocks where the stock price and the 20-day moving average is above the 50-day is listed right here. Oh, real quick, Gunter asked, do you still offer a 30-day trial to Power Options if you purchase the blueprint? Absolutely. And Dom, I'll get to your question in just a minute. Okay. Let's see, what's a good example here? Is it FedEx is one? No. Starbucks is not one. Oh, maybe we'll use MasterCard. Okay. Sorry. I know we're getting to the end, so I want to handle the questions that are coming in while I still show what I want. All right, so we narrowed this down to a limited list with just looking for one strike out of the money and looking for stocks where the current price and the 20-day moving average is above the 50. Now, Dom asked, suppose I have a stock in mind that I think is going to go up. Could I restrict the search to 1 or 2 symbols? Absolutely. One thing I could do right now is that we see that we have a MasterCard here. It's the October 570 call that matched our base criteria, our time frame, and our one strike out of the money. But I may be wondering, are there other MasterCard options that are available that match this search? Okay, so what I can do now is we'll go into fundamentals, and I can just look specifically MA. All right, and let me just put that in. Oh, that was the only one. Okay, but so I did have 4 pages of results, so I can just use that symbol here in the fundamentals to narrow it down. In the list section, there's 2 things we can do. You can create your own personal stock list. So if you just have 5 or 10 securities that you want to screen against, you can create your own personal stock list and then select to screen those. Also, let me go here real quick. I want to show you on the main home page on your Power Options account, you can plug in a list of symbols into your watch list. So you just have 2 or 3 symbols here. You could plug them into your watch list, the watch list 1, watch list 2, or watch list 3. When you create a watch list, that's now available for you in the search results. So you can screen just against your watch list 1, watch list 2, or watch list 3, and you can also modify that If I go into create and modify stock lists, yeah, sorry folks, there we go. I can modify my watch list 1, 2, or 3. I have 5 symbols in my one watch list, 12 in the other 2, but I can edit them directly from here. Okay, so you can do that as well. Now, a better way, Dom, what that's really good for, let me pause on this, and I want to go back. What that search by symbol in the search field is really good for, I feel. I'm sorry, in every strategy, I'm going to use bold puts again, but on every strategy you have a search by symbol. So you could just plug in a symbol here and your expiration and select filters for less, more, or all results. But what the search function of that symbol is really, really good for is, let's say I'm interested again in doing bold puts on Apple that have the standard expiration, but I know that I just want to see the spreads. Let's do that. Apple, I'll go to July and more results. Submit that. Okay. It's painful. It's not as bad as I thought it was, but there's a lot to go through here. But I only want to see the ones that have a good probability. Now I can scroll through here and I can say, okay, I'd start only at the 74 range and then the net credit. But an easier way to do that on these larger stocks, these larger ETFs, indexes, for example, is to use the search in your vertical spread. Bull put, bear call, even iron condor, for example. Let's go to search. And let me clear the settings. And I'm going to go standard July expiration again. And I'm going to put a probability of greater than 75, a net credit of greater than 50 cents, basic requirements. And then I'm going to go into fundamentals, just put in AAPL. All right, let's submit that. So this is a little bit better for these than using that, the search by symbol tool. But again, if you're doing the vertical spreads, I highly recommend using that spread chain that we linked to before, using the spread chain from scratch. You can plug in your stock symbol, your basic criteria of return, strike difference, range out of the money, and your stock symbol, of course, but then you're using the midpoint pricing to see the best bang for your buck, all right? Okay. All right, so let's go back to our long call screen. Now, let's take out MA. I know we're bouncing around, but I want to try to wrap up in the next 10 minutes. Let's take out MA and run our search again. Oh, also, if you're doing long calls, Charles, I'm sorry, and you want it to look by symbol, there's a fantastic tool we have here called the Long Option Finder. I'm not going to have time to showcase that today, but I'll show you where you can access the webinar that shows how to use that tool. Basically, all this does is you put in your stock symbol for long calls or long puts. You put in your expected price of where you think it might be in the next 3 weeks, 4 weeks, 5 weeks, whatever time frame you think the move. And the tool will show you which option may give you the best theoretical return based on your projection of the stock price and time frame. Okay, so we have 56 total results. Got to go back into technicals. We know that we have stocks that are trading, the stock in the SMA 20 is above the SMA 50. But if I wanted to make sure now that I wanted the stock to be at least 5 days or at least 3 days over the SMA 50, we'll use that field. So we'll put in stock over SMA 50, 5 to blank days, greater than 5 days. Let's submit that. Okay, so that narrowed it down to about 45 results. Now let's take a look at MasterCard here, and I'll show you what we mean. I use the 50-day moving average, but when we link to big charts, you can customize the field based on what criteria you want to use. Now this is a 6-month chart. I'm looking at Bollinger Bands and MACD, and with the Bollinger Bands, of course, I'm using the 20-day moving average. But we wanted to see the 50-day, right? Okay, so let's go ahead and go 50, and let me redraw the chart. Okay, let me take out Bollinger Bands there so it gives us a better view. Perfect. All right. So it didn't close below it. It touched it recently, but as you can see, it's probably more along the lines, MasterCard is probably more than, what's that, 30, about 55 to 60 days above the SMA 50. And if I change it back to the 20, of course, here we go. It is under the, the stock price today is above the SMA 20, it looks like, right above it. But it had been below it the days before. We've had a gap up today of about 5 points, is it? Okay. Gotcha. All right. Okay, let's see. Gunter asks, when will you expand this tool to futures and commodities? Probably not going to anytime soon. The reason why is to get the data feed for indexes and commodities. If we lumped it into power options, it would increase the subscription rate probably 2 to 3-fold for everyone. So in the future, if we do decide to go that route, we may just create a whole separate tool that uses the patent power options technology against commodities and futures, but because the data feed price it's just not worth it to do. And it's something that we're not really experts in either. So I understand this would be a fantastic tool to use for that. But we just don't use it. And so right now we do not have any plans at any time in the near future at all to expand to futures and commodities. Okay, I'm sorry, technical, let's go back. So that's how you can use these crosses. Is it cross, how many days has it been above a 20-day, 50-day, or 100 or 20-day above the 50-day moving average? To any of you, I just text in real quick. You got about 5-6 minutes. Does anyone use MACD, for example? To use MACD in your stock analysis, down here where the MACD crosses the EMA or looking for crosses. Dom says yes. Okay, and Charles says as well, great. So does Martin, fantastic. Let me show you something here that we just added recently. So, okay, for those of you that aren't familiar, we'll just give a base review. Let me go to a 3-month chart very quickly. Okay, so what we're talking about here is the moving average of the MACD lines, and what the MACD shows us is this, moving average against the EMA 9. The EMA 9, which is the red line here. It's called the signal line. And what investors look for, of course, is a lot of times they look for these crosses or these gaps. And okay, so we see with a cross here, kind of led to a slight downtrend. Okay, when the MACD dropped below the EMA, and over here, where we had a cross, and it's lagging a little bit because the stock, kind of bottomed out here. We see the MACD turn against the zero line of the divergence line, and then it started to move up when we had that cross. Okay, so let's say, looking for long calls, we want to see a stock where maybe the MACD has just crossed over the signal line, where we've just seen a cross in maybe the last 2 to 3 days. All right, so I'm going to look for a MACD over the signal, MACD over, by less than 3 days. Well, let's restrict it even further, less than 2 days. Now, I'm going to keep the other criteria there, but let's go ahead and see that. See if we've got any in there. Ooh, just one. Zion's Bancorp. Never heard of it? Let's check the chart. Let me close that real quick. Sorry, folks. Okay. Again, I'm going to go to big charts, and we'll take a look here. Okay, so this has started to swing up after a decline. There's a little grouping here. A little trend trading there for the past 15 to 20 days or so. Now the stock started to move up. There's our cross. Let's narrow this down to that 3-month chart to get a better look again. Actually, let's go 2 months. Fantastic. Okay, so what do we see here? Here is a good strong movement upwards. We saw the increase, both of these moving up. So we had a good increase in the stock price. Up there we had some turmoil, as we all know, at the beginning of June. So we had a cross, and the stock kind of went down, but then it held. And now we're seeing a cross. Again, it's a little bit of lagging indicator, but as it started to move back up, now we've got the cross and the stock showing a good trend. Okay, so that's how you can isolate these that search using the MACD to find stocks that have just recently crossed. What about a more pronounced trend? In other words, we're still going to keep the other criteria we had here. But what about, sorry folks, what about if we wanted to see stocks where the MACD has been over the signal line for more than 10 days? See if anyone on our list matches that. We know that, well, no, MasterCard wasn't, was it? I thought it was. All right, so we've got Webster Financial, don't know that one, and Micron Technology. Let's check the chart on Webster here. Yeah, so back over here. Sorry, folks. Let me clean that up. There you go. So it looks like back over this time, that was our 10 days. Right around the 14th or 15th, it hit, but it was still, it might have dropped under, but then came back. But we've been in an uptrend. The MACD has been above the signal line for the last 10 days or so, and it's had a good uptrend. Of course, those of you that are trading puts, you might want to reverse that. And you could do that very easily. Okay, so we go back to the technicals here, and we could go under. So days of the MACD is crossed under the signal. Let's look for anything. I don't think we'll be able to, I'll have to change something, so sorry about that. Even though I'm still in the long call, so I'm going to change this to none versus none. And we're going to look for the opposite. Okay, and there's going to be a lot of them. Oh, MasterCard was one. Okay, and we saw that earlier, so that's where we've maybe switched, and we're looking at the down range. Okay. All right, 1 second, folks. Let's see here. Oh, okay. Sunil asks, are the RPM Mary Put income methods available in PowerOptions? No, the only place to learn about those is in the blueprint. And you can, if you're tracking a Mary Put in the portfolio and you link to the position analysis screen, it may show you opportunities. We're doing the math for you of potential income methods, but you still have to make the decision. But there's no education on PowerOptions about the different income methods, when to use them, when to apply them. And are they available as auto trade? No, we don't. On the Fusion subscription at radioactivetrading.com, we don't offer the radioactive trades as an auto trade function. This is not really designed to be a direct advisory newsletter service. Since stocks go faster than they go up, what is the best MACD to show a downturn to buy puts? Oof, tough question, Martin. That's tricky. Well, this would be something, let's see, I'd start with that, using the maybe MACD where it's recently crossed, and then maybe stocks that are in, kind of maybe stocks that are below. I'm sorry, let me change this. Yes, I'm still in the long call menu, but we're just showing this as an example. If I'm looking for long puts, I may look for stocks that are currently in a downtrend, or if you're looking for stocks that are maybe reversing, you may look for this cross within the last 3 days, as we just did. And you may look for something where the signal line or the MACD is negative. Let me show you what I mean by that. Let me submit the search and see if we get another result. This might be something you might want to use. So you want to look for a real cross. Monsanto, I figured that would be one. Although it's popped up today, but let's look at the chart. And I think this has been in an uptrend for recently. Yeah. Well, yeah, back here, let's go back to 2 months again. Open this up. And as you mentioned, the puts happen so much faster than the other times. So great time might have been a crossover right here, right? When we're looking for that crossover right here, that might have been a really good time to buy a put. I don't know if you can see that. So right about in here, when we saw that first crossover, when it was had been moving up and then it crossed over, and even here, when we had a large, not necessarily a gap, but we had 3 or 4 days of it being below, and that would have been a great time for that. Of course, we would have had to known to get out right around here. Hopefully, we would have gotten out here. If not, and we would have been in trouble as it gapped back up. But it tried to come back a little bit, and then we had another crossover here. So it's kind of been moving down, but it's holding today. So those are the kind of things you might want to look for. And oops, sorry, folks. That's what we are kind of showing there in the technicals, is you want to look for that crossover. And again, negative to negative, that means just both of them are down, so it might be more of a pronounced downtrend. That's a starting point. I'm not going to say it's the best criteria to use, because you can always have a reversal, but you're absolutely right. You just got to make sure that if you're using that, using the MACD and the cross signal, we'd switch to under inputs. And if you wanted to look for a more pronounced downturn, we could look for the stocks that have been under, where the MACD has been under the cross signal for 5 days. All right. So hopefully that gives you some background on the MACD. If you have any last-minute questions about that MACD filter, go ahead and send them in. I'm going to go ahead and wrap up right now because we're about 10 minutes, 15 minutes after. Very quickly, for those of you asking about some of the other questions about the radioactive trading techniques and using PowerOptions tools for that, as well as what I wanted to talk about in the long option finder, if you go into the Learning Center menu on your account, you can click on Webinars. Okay, and actually, if those of you that are online right now, if you don't currently have a trial or a subscription to PowerOptions, let me just send you this. This is a public link, powerop.com/webinars.asp, and this will take you to the webinars page where you have the upcoming live webinars you can register for on the left and the previously recorded webinars on the right. Okay, and so let's go to PowerOptions Tools Archive. Here's some of those introductions to PowerOptions. Yeah, this one is old, so today I'm probably going to change over. We'll probably, archive this presentation we're doing today and replace it from the one from December 5th, 2012. So you'll have that here. It'll be Intro to PO, and we did focus mostly on bull put, so I'll keep that title, Bull Put Focus. So there's other ones you can look at here. Repair your sunken stocks, for example. Introduction to the portfolio tools. Those of you that had questions about the portfolio tools, you want to check that out as well. Now for the option strategies, there's some other tools you might want to take a look at in here. I am missing something. Hold on one second. I think. Okay, well, for those of you, I'm sorry, I wanted to go to long calls and long puts. You have that one there as well. I'm going to have to go into another tool to see something here, okay? Dom, I'll get to your question in just a moment. Sorry, so what I want to say is that you have some other links in here. Using Power Options for weekly options, that's shown as well. The stock or portfolio insurance. There it is. I'm sorry. That optimized or the long option finder tool I mentioned in our other discussion when we were talking about long calls that I didn't get to, you can find that here, picking the best long calls and puts. So that's a very useful thing to see how to use that tool. It's only about a 15-minute presentation. Those of you with questions about radioactive trading, Martin, I believe it was you who had asked that question. If you go into the archives and click on the tile for Power Options for radioactive trading, here's a full hour-long presentation on using the Power Options tools for radioactive trading. In addition to that, this hour-long presentation goes through using the search tool, how I analyze and research the positions, and then use the portfolio tools. So that's condensed in about an hour. But then we've expanded that out. So you've got the Power Options Search for radioactive trades. It's a full hour on just using the search and discussion there. Research and analysis, and then using the portfolio tools. You've got a wealth of knowledge right there, and you'll see as soon as you get into it and start watching that first presentation, it's not going to take you 6 months to learn how to use the tools or learn how to use the Mary Put techniques. I'm going to help you along with that, and those webinars will greatly help you get more familiar with the search tool and using that for not only radioactive trades, but for other positions as well. Covered call focus here, long call and long put focus, and so forth. And there's just a broad overview and just the basic Power Options tools as well. Okay. All right. So let's navigate over here. Dom asked a question: is the option data real-time, 15-minute delayed, or closing price? Let me just go here. We offer several subscription services, Dom. The 20-minute delayed service. It's actually probably closer to 17-minute delay, but the 20-minute delayed service is $60 per month. We do offer a real-time service where every time you refresh the page or run a search, you're getting the numbers and calculations at that very instant. That's only $80 per month. It's access to all the tools and all 23 different strategies plus the portfolio tools. Now, the historical data actually right now is only available on the upper level of service. So the real-time and historical service is $100 per month. That'll give you access to the real-time data plus the historical suite of tools. All right. Now, if you think of any questions later on that you didn't get to ask during the presentation, send me an email at any time to support@powerop.com. Of course, you can join us for any of our other regular webinars during the week. And, of course, you can also call us during market hours at any time. If you live inside the U.S., you can reach us at 877-992-7971. It's toll-free. But if you do live on the outside of the U.S., if you do live outside the United States, you can reach us at 302-992-7971. All right. Well, ladies and gentlemen, thank you again for joining me today. I know we covered a lot, but I was just trying to emphasize the fact that when you first go into that search tool for any strategy, you probably already know 5 or 6 criteria that you're going to look for, which you might look for in a stock, whether it's in an uptrend or a downtrend, if you're bullish or bearish, what kind of net credit or premium you're looking for, probability you might want to see, range in or out of the money. Start with that. Clear the filters and start with your basic search first and plug in your 5 or 6 criteria and run that search. And you'll probably narrow it down to maybe only 80 or 50 or 60 results. And then you can start just fine-tuning the simple criteria that you would use to get you a good manageable list. And then, of course, as you're going along and putting in your basic criteria, if you see something that, hey, wait a minute, there's something here I'm not looking at, or maybe I want to use something different. If you're not sure what a criteria is or what you might be able to use, just hover over it, and it'll give you a basic description and how you might use it. And, of course, if you're not getting the results you want, or you feel that you're not using the search tool correctly, or you're still kind of intimidated, at any time, just go to that main home tab, click on the free coaching session link, and just schedule one of the next available sessions. It's available either in the afternoon or in any of the upcoming trading days. And we'll be more than happy to walk you through that, answer your questions, and show you what criteria you may want to use to match the search you're looking for. All right. Well, ladies and gentlemen, thank you again for joining me this afternoon. We'll see you again soon at one of our other upcoming presentations. Send me an email or give me a call if you have any questions at any time, and we'll talk to you soon. Good night.